In this overview, we look at a model that looks to replicate private equity returns in the public markets. The key fundamental investing insight here is this. Investors can attempt to mirror the returns of private equity without the high fees by using a portfolio of publicly traded leveraged small cap value stocks. At a high level, the strategy looks for inexpensive stocks based on the enterprise value to EBITDA ratio. It then attempts to leverage the value exposure by focusing on firms with above average debt that have demonstrated the ability and willingness to pay it back. The source and the evidence behind the strategy: we base our model on a 2015 research study, Leveraged Small Value Equities. In the paper, the researchers backtested their strategy, and they showed that it produced an annualized return of 25.1% per year by holding the top 25 stocks according to their small cap leverage value model. The investment thesis is this: the returns of the value factor have the potential to be magnified by investing in firms that responsibly employ operating leverage in their business. Let's now take a look at VALIDEA'S private equity investor model, which we base on the research paper Leveraged Small Value Equities. To start, we need to find the small cap stocks in the market. To do this, the strategy requires a market capitalization of between the 25th and 75th percentile of all stocks in the universe. What this essentially does is it removes microcaps from the screen, and it also removes mid and large cap stocks. Next, we need to filter on value. So here, what the model does is it uses enterprise value to EBITDA, and it only selects the bottom 25% based on that valuation multiple. The next step is looking for small cap value stocks that have high levels of debt. Since private equity firms oftentimes leverage up companies to magnify their returns, what this model does is look for companies that have above average debt in relation to their enterprise value. The next four criteria indicate the company's ability to pay down that debt. So the model uses the change in long-term debt compared to assets, gross profit to assets, and also asset turnover. If these four investment criteria are favorable, it indicates the company is likely to be able to pay down its debt in the future. As debt gets paid down and bankruptcy risk comes off, typically these stocks exhibit multiple expansion, which is what produces the strong returns over time. VALIDEA'S private equity investor model provides investors the way to identify small cap leverage value stocks that may have the ability to replicate private equity-like returns over the long term in the markets.